Hello, everyone. Hello. I trust we are doing great today, and it's been a great session so far. All right, a big welcome to every one of us, and thank you for your commitment towards our wonderful boot camp so far. So good. I believe it has really been great, right? Let me even hear from one or two persons. How has the training been so far? Right, and I also know that some of us we've had experience learning financial modeling here and there. What can you say as compared to this, right? I just want to hear maybe from one or two persons. Kindly share your experience with what we've done in this boot camp so far, so good. Anyone would like to share with us? What's the experience like? So you can just share your mic, just share with us, right? Your experience with this boot camp as compared to other financial modeling training, modeling courses that we've done. Anyone? Or I should just call on us. I should call on anyone. Will that work? Anyone want to share with us your experience with the boot camp so far? Some of us might be shy, all right, but you know what? You don't need to be. You don't need to be. Just go ahead and tell us. Do you think the boot camp training has been so far? Abraham, you want to share with us? Daniel, Luadara, Olatobi. Can you share with us what has been your experience with this boot camp so far so good as compared to other financial modeling courses that you've gone through? Who is willing to share with us? You don't have to make it something big, just maybe in one sentence.
Hello, Victor.
Okay, yes, Daniel.
Hello.
I can hear you, Daniel.
Do we have to speak or we can type? Do we have to speak or we can type?
Okay. Oh, that's true. That's another option. You can speak and you can as well type. Yes. Oh, yeah. I think I forgot to mention that other part of it. So you can chat or you can type in the chat box as well.
Okay, good morning, everyone.
Yes, Daniel.
So I think so far, yeah, I think so far the boot camp has been very great and awesome. What makes it different from other financial modeling courses that I have taken online is the practicality of it, like looking at the practical side of the financial modeling and not just, you setting up your structure and your calculations, but, you looking at how in real life, how in real life businesses work, and then incorporating that into your model to make the model something that is real and captures the situation of the business, in a more uh, accurate manner. So I think that's what stands out for me from the bootcamp. So from the way we started by looking at how to get data from clients, in a Word document, and then factoring macroeconomic indicators into your model and all of that. So I think those are the things that stands out for me. Thank you very much, Victor.
Thank you for that, Daniel. Thank you for sharing that experience with us. Anyone want to share their own with us as well? All right. So for some of us that were just coming in, we're just having a general talk, general discussion. Yes.
Okay. Good morning, Victor.
Razak, good morning.
Yeah, this is Razak. Okay,
Yes.
yeah, good morning. Yeah, I really want to start by saying thank you for this opportunity granted to us, because in the past I've also taken some financial modeling course. So maybe the one that I've taken online, where I've downloaded. So what I can say is that even the presentation of the result itself is quite so exceptional from the one that I've taken in the past. So, and from from what we have done so far, it really, it has really opened my eyes that what I've been thinking that, okay, maybe I'm an advanced executive, so still made me to know that I still have a long way to go, even in the beginning. In the beginning parts of some areas that I still need to learn in Excel. So if I really want to make my financial model to be to be less tasky, so that's I really want to say it is so. The experience has been so exceptional so far. Yeah, thank you.
Thank you, Abduraziz. We appreciate, and I'm glad you're part of it. So, for some of us that we came in a little bit late, we're having a discussion just for you to share your experience with us. How's the boot camp been, right, as compared to other modeling courses that you've done, right, or your previous knowledge. And thank you for those that have been able to share. So, anyone want to share their own before we get to what we'll be doing today? Anyone? Just share your experience. Just share your experience. And once again, okay, yes, Marco. Marco, you have the floor. Okay, I'm not sure we can hear you, Marco, but your mic is open. Okay, yes, Lillian, you have the floor.
Hello, hi Victor.
Okay, yes, Lillian, how are you doing?
Good morning.
Morning.
Well, I just want to say thank you. So far, this session has been great. It has been enlightening, and I would say even if there's nothing I go home with, if I can say I go with the fact that my Excel skill has not been the same. Like there has been a great improvement in all I've learned, the formulas, linking of sheets, and a lot. So I just believe it just takes maybe a little more discipline and resilience on my part to be able to incorporate all that we've learned, because it's a whole lot, I must say. And I want to say thank you for this opportunity. Even if at the moment I won't say I'm an expert yet, but I see it as a step towards my modeling career. Thank you, Victor.
All right, thank you for that. Thank you so much. So Oluwatimileyin is also saying the bootcamp has really been practical and informative. One thing I also appreciate is the way new standards are being employed to our model. You explain it, breaking it down so well, which other modern trainees never did. You're indeed a great teacher. Okay, I'm actually I'm still learning, right? So the word great teacher, okay. Okay, so he said in a noisy place, so they might not be able to unmute his mic. So Abraham is saying, the experience has been great so far. It's my first time seeing a financial model built from scratch. I love that. So a very big thanks to everyone, all right? And we really, really appreciate that you're part of this bootcamp. So we need to give a big appreciation to someone today. The recording of the last session was actually financed by someone. Yes, so part of our participant, the person said I should not mention his or her name. So I'm not going to mention that, but the person had to reach out to me that, okay, if someone has supported the previous one, is ready to support that. And he was the one that actually sponsored with few cash for us to be able to process the video and upload it on our YouTube and share the link with every one of us. So let's just say a big thanks to the person. Let's say the big thanks. So you can type thanks in the chat box or just wave at the person. You can click on your hand too as well, right? So those are the kind of great support that we need. So you can always go back and watch the video anytime, any day. So let's say a big thanks to the person. Yes, yes, yes. The person actually sent a huge lot of money. Right. So let's say very big thanks to the person. So very big thanks, big thanks, big thanks, big thanks. Right. The person said I should not mention his or her name. Okay. Yes. So big thanks, thank you, thank you, thank you. Funny thing, the person is also saying thank you as well. All right, so great, 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 great. Now today, so let's appreciate our sponsors, right? The Brown Consulting, that's the company I currently work with as a financial modeling analyst and a corporate trainer. Microsoft, partner, and remember we are making use of their tool as well. And also Microsoft Most Valuable Professional, which is more like a community. All right. And also my colleague Adedola Mushogilola will likely be joining us in the next session to take on the valuation part of it, right? So we try and wrap up our own model, my own part today. Trust me on that. But remember the fact that learning continues. Let me just put it that way. As I said, number one is if you are lucky to have a good resources like this for someone to take anything you want to learn, if you are able to learn it from someone that's kind of more like what they do every day, right? And they teach you the practical aspect of it. You know what? That's more like the best thing. By that time, after you've understood the practical approach of it, if you now go back and you start reading books, it just kind of flow. And that's my own approach and my own method of learning. I'm a self-taught financial modeler. I won't lie to you, right? I was staying in one corner of my room for like a whole 1 year. But all along the way, I was able to learn the practical aspect of it. So understanding it and connecting it together was just very, very easy. Right, so you'll be joining us on the part of the valuation. So a big thanks, everyone. Thank you for coming in as well. So how many of us were able to balance our model, our monthly model? Yes, yes. Just click on your hand too. If you're able to balance up your model, if you're able to balance up your model, you were able to balance up your model. Right, so this is where the second part of being a financial modeler comes into play. You need your accounting, right? For everything that we have related to our financial modeling, we've done it in our inputs and also in our calculations. That's where the main modeling is. Your input, how you structure it, your calculation, how you do it. Then you see that output part of it. Now, that one is between you and your accounting knowledge, right? Right. And that's why it is very, very important. Number one, I find it very, very hard to teach anyone that does not kind of have accounting background. Yes. And your model not being balanced, then definitely that also comes with your accounting knowledge. The truth about it is everything we are doing is still double entry, just that we are not just creating that ledger account. Right? So as such, as an accountant, you need to understand how does this line item flow? How does it flow? From your calculations, everything you are doing is you are just linking. That's the whole thing. Linking, 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 linking. So if your balance sheet is not balanced, definitely that is coming from your accounting, your inability, right? To not to be able to balance your account. And number one thing, any model you build must be balanced. Trust me on that. Not self-balancing, because all you are doing is linking, linking. So we're able to build out our income statement, right? And we also consolidated that into our yearly. So now let's make it interesting. Let's make it interesting. Let's build the balance sheet together, right? If normally we're supposed to just move on, but I realized that most of us had difficulty getting this. So for our non-current assets, so let's just call this our property, plant, and equipment. So let's build the balance sheet together and let's see if it will balance. And if it does not balance, who are we going to hold responsible? So non-current assets. So let me use this as our code, NCA. So I call this our total NCA, non-current assets. Right. So let me just copy this our currency that we have here and put it here. Right. So let's just create the layout first. So our assets, then we need our current assets. Current assets. So what are the things? So let's look at our working capital. What are the things that we have under our working capital? Remember, our operating working capital forms elements of our what? Of our current assets and our current liabilities. So receivables and prepayment. So let's call this our trade receivables, right? Prepayments. Then we have our cash and cash equivalent. Then we're going to call this, okay, this one is copying the format. So then we call this our total current assets. Now I'm actually missing something. Can anyone tell me what I've missed out in these assets? Anyone? We've actually missed out something. Anyone want to tell us? We've missed out something in this our balance sheet line item. Loans and advances. Thank you. So which will even come first here? So loans and advances. Many of us forgot to add this, right? So it's an asset to the business. It's an asset to the business. So total assets. So let's just create the layout. Don't mind me. I know I can be fast with Excel at times, right? And it's not about me. If you want to write the financial modeling exam, you really need this. You really need this. You really need this. How about license? License should be intangible assets, right? Oluwaseyi, oh, I'm not sure I want to go back to that to where you want to take us to. So maybe you need to review the previous session video, right? Okay. So then we need our, so let me make this dynamic, put this here. Then let's call this our equity and liabilities. So Luashe, might need to, and Oladipo, might need to review what we've done in the previous session. I'm not sure I want to go back to that discussion. And then I know that most people understand why I just call this property, plant, and equipment. Right, so we need our equity. So we need our capital. All right, and we need our retained earnings. Then we have our total equity. So please, one important thing, right? It's always easy when someone is doing it and you think you understand. No, it's always good when you get to do it yourself, all right? Based on our concept of training. If you learn anything for 2 hours, you need like ×3 of that same time to be able to master it on your own. So it's always good. It's always good. So for our liability, so we're going to have our non-current liabilities. And then I think we have our, we are making use of loans, right? So let's call this our borrowings. Let's call this our, so I don't want this to be too long. So our non-current liability, NCL. So I call this total NCL. So let me copy this. So I'm just creating the layout as a modeler. This is supposed to know the structure of your financial statement. Right, so this will be our current liabilities. And we call this, we need our, what do we need? I think we need our deposit here. Deposits. Deposit and deposit or savings. Okay, I think we should, let's call it savings. So deposit, since saving is fine. Deposit sounds like a bank. Then let's look at our working capital. We need our trade payable days, accruals and others. So trade payables, then our accruals and other liabilities. We have this, we have our total current liabilities. So as a modeler, you must know this. I'm not sure there's 2 ways to it, right? You must know the structure of all your outputs without having to check anywhere. Right, then we're going to have our total equity and liabilities. I think before that, we need to have our total liabilities. We have this. So we've created the layout. So now all we need to do is link property, plant, and equipment. I'll go to my monthly calculations and I will have that under my what? Under my asset schedule. PP schedule. I'll link it here. Enter. Just submit here. My loans and advances equal to, right? So I hope you understand the reason why our loan and advances is coming to our assets. Anyone want to just explain that to us? Yeah, so that does not seem I'm the only one that understand it. So why is our loan and advances coming to our current assets? Anyone? It's like our inventory. That's a very good explanation. I love that. Just in short, it's like our inventory. Yes. Anyone else? So Luashe, you said it's more like our inventory, should be treated as our inventory because that's more like what the business is selling. Anyone else? Any other points why you think loan and advances? So, okay, it's an asset. It is the main activity of our business. I love that. I agree with you as well. Any other reason? Anyone want to give us any other reason? It is a receivable account. I love that. Exactly. Main part of the business operation. So those 3 points are very, very valid. So equal to, I'll just link it to what we have here. Here is our savings. So total savings, we just link it here. Our trade receivables go straight. So as a modeler, please, it is always good as well to always know to know your model in out, right? You want to be presenting to your client and you yourself, you cannot even find where you put all those variables. Okay. Okay. So why haven't we considered the investment facility as an asset? Shegun. Okay. So, Oshegun, okay, can you be clear? Can you give more clarity about that? Right. I understand what you're saying, but can you give a clarity? Okay, now good. Okay, yes. Shegun.
Yeah, sorry. While we were doing the input,
Mhm.
we assume that I think 1 million or 1 million would be invested
Mhm.
in inside the investment facilities to be generating income for us. So I expect that that should become part of our current assets.
Should that be current or non-current?
Well, depending on the
So another question is, should the investment facility be an asset or a liability? What do you think?
I think it's an asset.
Okay, so someone is saying is a liability. Let's have that discussion, everyone. Right? Remember, we are doing this together, and that's more like how you get to learn. Investments facility, which is more like a fund under their management. Do you think it should be an asset or a liability? Shegun believe is an asset, right? Aldo is telling us it should be a liability. Oluwaseyi is also saying it's an asset. Let's have that discussion. Everyone, what do you think? What do you think? I think we have to classify it as both an asset and a liabilities. Daniel is giving us another perspective. Daniel, can you explain? How do you think we should treat that?
Mensa is always having different perspectives.
Yeah, which I think I like it. So, okay, yes, Daniel.
Yeah, my apologies. I'm in academia, so I tend to, question things a lot and, have different perspectives. So sorry about that. Yeah, so what I'm thinking is that it's a liability in the first place because it's monies that we have to, how do you call it? It's more or less like a responsibility that we have to, an obligation. So our customers have given us funds to invest for them. So we have to make sure that we are able to, in the future, return that money back to them when they need it. And then also it's an asset because when we invest that asset, we might buy securities. So as someone says, it's a financial asset. So we might buy securities and that securities becomes an asset. That's if we want to, put it on the balance sheet. We have to see it as both a financial asset and then a liability.
Perfect,
Yeah,
Daniel.
sorry.
Yes, thank you for that.
So
Thank you for that.
that's from my end.
Right, thank you for that. Right, as I said, what makes you a modeler? Financial modeling is not a one-way thing. So you need to think, you need to look at your model very well. So definitely, investment facility is a liability. It's more like it's like that same saving. Someone put the money in our on our platform that, okay, do this, and we are generating that interest income. So we owe them, we need to give them back their money, right? Any commission is what becomes our own interest. On the other side, yes, I agree with what Daniel said, right? What if we now convert that investment amount as well? We also will now reinvest it again, but that will be another old story. So you must always be clear about what particular line item is saying. So definitely this will be our form part of our what? Of our liabilities. So are we going to have it under current or non-current? Another thing. Are we going to have it under current or non-current? And what would be the better name that we can give to it? Depending on the term of payments, okay? So I think we set it as yearly in our input. So, okay, we set it monthly. I think, yeah, I agree with you. I think let's put it under current liability. Okay, someone is saying the loans and advances not linked correctly. Okay. Miko, yeah.
Yeah, you linked savings schedule should be loan under loan schedule.
Oh, okay, a good one. So let's look. Okay, that's good. That's a good one. So we are linking it to our maximum loan, the actual loan disbursed. Thank you for that. I meant to link it to the wrong one. So as a modeler, learn how to give attention to details. Thank you for pointing that out. So current assets will be our total assets and current asset plus current assets. So I'm quite sure you can see a lot of reasons why your own model would not have balanced. So for our capital, let's link that to our schedule as well. So remember, you must always know where you have your model. Is it the maximum loan disbursed or the loan ending balance? Let's check that. I think that should be, where is it? Okay, it's supposed to be the ending loan schedule. So as I said, know your model, know the whole thing. As I remember, I said we'll be making a lot of intentional mistake and the whole thing, and that is how you build a model, right? This is all things we are doing. You can see all the mistake and the funny things, and you do this kind of mistake. You just use it to mess up a whole investment because the output will not be showing the true color. So these are the things. These are more like the most important skill of a modeler, right? So let's go back again. And let's link it to the right one, which will be our loan ending schedule. Our retained earnings, let's link that. As our retained earnings. Okay, so we've actually not calculated our retained earnings. So let's go ahead and let's do that. Our net profits equal to, we have that here already. So let me just link it. Copy that to the right. Then for our dividend, so equal to, I'm going to use our mask. If our net profit is greater than 0, close the bracket and put, and now multiply it by what? So if this is multiplied by this, are you greater than 0? So which is going to give me false. I remember anything multiplied by false is as good as being multiplied by 0. So I will now multiply by this net profit. This net profit multiplied by this our dividend payout ratio. So some would have preferred if function, but I try as much as possible to reduce the use of if function in my model. I can just drag this to the right. So let me go back. Let me link them out. Then let me sum our total equity together. For our borrowings, link that to our ending schedule of our loans. Let me sum this together. So here we should add our fund under management. Fund management. Is that naming good? Is it good enough? I think so. So for our savings, let's link that to our savings schedule as well. So where's our savings schedule? Okay, our savings is our total savings. Our funds under management. So I'm not sure we create. So let's just link this directly. Trade payables. We have that in our working capital. Payables and our accrual. Then we sum this together. Our total liability, we are non-current liability plus our current liabilities. Our total equity and liability will be our total equity plus our total liabilities. So let's have a balance check. And our balance check will be our total assets minus our total equity and liabilities. Right? Right. Okay. So okay, I need to change my network. It's kind of giving me a notification by my data is most exhausted. So let's just have a 5-minute break, right? Then we'll continue from where we stop and we'll go straight to the cash flow part of it. All right, so we are back. We are back. We are back. We are back. We're back. Yeah, sorry about the breaking transmission. Okay, so now let's go straight to our. Okay, so let me just drag this. And we have that for every other years, right? But most time, based on the best practice, right? They always encourage that you do it for a period 1 first, right? And if the period 1 is balanced, then you can now go ahead and drag it for other years. So in case your period 1 is not balanced, it's kind of very easy to just look through and go through only the year 1 to see where that is coming from. So let's also imbibe that approach. So let me copy this, our headings, and let's create our cash flow statement. What are the things that we need? We need our cash flow from operations. So most times when I'm creating my cash flow template, I usually like working with a particular structure, and the reason for that is so that my cash flow from operation and my investing can always be equal to my free cash flow to the firm, right? Because if you use the other approach, most time there's always a change. So for this one, let's start with our EBITDA. Then let's our tax paid, and then so we forgot to even link something here. So under our liabilities, we're supposed to have our tax payable. We're supposed to have our tax payable here. And why are we doing that? So if you look at our profit or loss account, we are saying any, so let me zoom this out. So we are saying any tax that we calculated during this period on 31st January, right now we are discussing about the cash management, will definitely be paid the following day, which will now fall inside this month. So by the time we are doing this, our account this period, this tax is actually payable to the business. And as such, it comes straight into our what? Into our liabilities that we are currently owing this current period tax. So let me add it to the submission as well. So we list our tax paid, then our change in our OWC, right? I think that's all we need here. Yeah? Then we can have our net cash from operations. Let me also copy this. We have this. So now let's start praying. Our model must balance. You know how funny that can be, especially during our school days. You're in exam. You're just praying. This thing must balance. So our cash flow from investing activity. So maybe I should just put a gap here. So we call this our property, plants, and equipment. So I think we've missed out something. Anyone notice? Anyone notice? Anyone notice? We've missed out something. We've missed out something. How about the movement in cash from fund and loans exactly? So we need to bring that here. So, okay, so I think I did not even arrange this. So I think change in working capital should come first. Tax paid should be the last one. Then we can have our what? So where's it? So we can bring in our change in our loans and advances. So let me just bring it here. Okay. Then we need our change in our savings and fund management as well. We need that. We need that here.
Hello.
Okay, yes, Shagun.
Yeah, sorry for taking everyone back. Please,
Okay.
I just need a little bit clarity on this fund management. Where is the money coming from? Because I'm still not clear on that. If the money is coming from the savings from customers, I
No,
do
no.
not already
So
recognize that under liability.
fund management means, you know, if you go to some of these loan platforms, they usually have these accounts where they will ask you to put your money in like a one investment, and you will generate a particular interest from it. So it's assumed that people or companies just try to put their funds into on our platform for us to help them invest in different things, and we charge them that interest on it. So it's not our money. So so something like piggy,
I
you
think
know, all those piggy
I'm just
vests
getting
and
that.
all those things. Yes. So
All those agri farms. Okay.
so you
I'm
get it.
getting
So
it now.
it's just something that flows like that.
Okay.
All right. So here we need our capital. So why are we not adding back depreciation and provision on loans? Because they need to adjust for as a non-cash line item. So for the depreciation, EBITDA, we've already used EBITDA to capture that, right? And that provision as well also kind of comes under that. So that's why we are using EBITDA. So the reason why we're actually using this approach is by the time we create our free cash flow to the firm, just kind of flow. Right? So capital contribution. Then we need our dividend paid. Okay, no. So let's inflow from our loan. So loans inflow. Then we have our dividend. Okay, no, we have our principal repayment first. Principal repayments, our interests. Should interest expense come here? So interest expense, then we have our dividend paid. So almost everything, as I said, after you are done with your input, your calculations, they are just our typical accounting thing. And that's why it's very, very important, that accounting understanding. So this should be financing. So I'm not sure there's any two ways to it. We still don't know exactly. It's easy to grab as soon as possible. You see the accounting part of it. Especially this cash flow. Cash flow can be funny at times, right? So this is our cash schedule. I know a lot of great accountants, and most of them still find it hard to just to understand this cash flow. Okay, do we mean borrow? Yes, borrowing inflow. Yes, loan inflow. Okay, maybe I should just call it borrowing inflow. So it's very clear. So our cash schedule, we have a beginning cash, cash generated for the period. Then we have our ending balance. So I know some of you might be wondering how do I get to be this fast, right? You can also be fast. You can be more fast. You can be way faster. I'm now slow. Yes, I'm even slow now. so before I can be way faster than this. But when I started training, I realized that at times I need to just slow down, right? And you need it because if you want to write the financial modeling exam, typically the model, they will give you a model to build from scratch. The model is supposed to take you like 6 or 7 hours, but they will give you 4 hours to build. Yeah. So when we practice for the exam, we set our own time to 3 hours, 30 minutes. So you really need that fast finger. So our EBITDA, let's link that to our EBITDA here. Right, changing our working capital, just link that to what we have here. Our loan and advances will be, since it's an asset, that will be previous year minus current period. Our savings, since it's a liability, will be current year minus previous period. I hope most of us understand that change. So for our fund management, it's also a liability, so current year minus previous year. Of our tax paid equal to minus, as I said, is cash management. So the tax due for previous period will be paid in the current period. So we have it like this. I can sum everything up. Our cash flow, our PPE, I'll go straight to my PPE schedule. Just link that to our minus our capex. Sum this, we have this. Capital contribution, where is the change in our equity schedule, which is our inflow. Our borrowing inflow, go to our loan schedule, which is our new loans. Our principal repayments, that will be in form of negative. Link that to our repayments. Interest expense, we'll just link that to what we have in our income statement here. Dividend paid minus what we have in our retained earnings. Then I can sum it up. Now let's start spraying. The model must balance. Our balance sheet must balance. This part is always funny. So cash flow from operation plus cash flow from investing plus cash flow from financing. Let's link that to our balance sheet. Equal to, and link that to our balance sheet. So now in linking that, we need to be mindful of two things. All right. Number one is this. Let's assume, so let me give us example. Let's assume this our ending cash for this period. So let's just assume. So let me put minus here. So just so I want to understand, I want to explain a concept to us. All right. And maybe you want to learn about cash sweep, some debt financing of a thing. You need this knowledge. So let's assume here we do our calculation and we have a negative cash. Now let me now assume I'm coming here and I'm typing equal to, and I'm linking down my cash to this negative cash just the way we have it. Now let's discuss some accounting things. What do you think I've actually done? What is the implication of what I just did now based on our typical double entry? What do you think I've done to my assets? What do you think I've done to my liability and equity part? So let's discuss accounting, right? So I'm saying I've actually linked this. Yes. No, okay. No. We are not talking about overdraft. Let's talk about general accounting. So let's assume I link that to my negative cash directly to my cash and cash equivalent. What do you think I've done to my assets? And what's the impact on my total assets and my total equity and liabilities? Let's discuss accounting now. Normal double entry. What do you think we've done? What do you think we've understated our assets and also do what? We've also understated our liabilities. Perfect. So that's one. The second part of it is this. There's nothing like negative cash. It's either you have a cash or you don't have a cash. Let me tell you, for example, I want to travel from here to another state. And I came to you as my friend and I tell you that, you know what, guy, I don't have any cash. Both my pockets, the bank or anywhere. Then the following day, and I'll call you and I'm telling you that, hey guy, I'm in this other states. I've already done my traveling. Now, what do you think will be the first thing that will come to your mind? Because yesterday I told you I don't have any cash with me. What do you think would have happened for me to have been able to move from where I am and be able to do that traveling? What do you think would have happened? Definitely, I got the money from somewhere or someone borrowed exactly. So which means by the time I'm doing my own cash computation, right, my cash analysis, I'm at a negative cash. But the truth is someone has actually funded me. So which means there's nothing like negative cash. So if I do my cash, if I prepare my cash schedule and I have a negative cash, it simply means someone has actually funded that. And that is what forms our element of overdraft or revolver. So in a typical model that you build, right, especially in project finance, your ending cash is either your ending cash is zero or is positive. So there's something we build into the model which makes it a circularity. So we are saying once our ending cash is negative, that means we need to go and borrow money to be able to run and sustain ourselves for that period, because there's no way business can run without cash. So linking a negative cash to your assets is simply means you are understating your assets and understating your liability. So which means to do this, to automate it, we use a formula called max. So maximum of 0, comma, or the ending cash. I know that 0 will always be greater than negative 1 billion anytime, any day. So which means anytime it is negative, that means we don't have any cash. And on the other side, that means we now need a guy here that we now call our what? Overdraft. Some call it overdraft, some call it revolver. But we are not going into the revolver part of in this our current trend. So you can always learn about that. So this time, so some people can use mean, but let's, because of course consistency, so let's use that same max. So we are saying max of 0, comma. Now, before I will now link this ending cash, I will now put a negative of this our ending balance. So by the time negative multiplied by negative is going to return it back to us as positive. And at that time, it will now be greater than 0. So, and it comes in here directly as an overdraft. Can we use ABS instead? If you use ABS will not work, because once it's positive, ABS will still give you the same value back. So ABS is just changing the stuff. Okay, so instead of using the minus, okay, so you are saying we should use maybe our absolute formula. So absolute, right? Then you select, you click on this, close the bracket and enter. Okay, this could work. It could work as well. So by the time we put this back to, let me remove the negative that we put here. And we have this, let's see, does it work? So you see this where the problem kind of comes into play. So it will return it as both cash and return it as this. So ABS will definitely not work. So it's better we just put that negative, the ending balance. So it comes in here. So we then go ahead and we link that. So let me put that in our formula. So which means our balance sheet is balanced. So that's what our standard is saying for you to work faster and be able to save yourself in case the model did not balance. So you just copy everything and can drag it for other years and just copy it to the right. So if our model does not balance this time, then we know that something is wrong somewhere. So this is a very good one. So if you look at this, our he said, promise. Okay, so we have a negative cash starting from September 2020, and if you go straight, you see it flows straight into our overdraft, and you can see our ending cash is what is negative. Our ending cash in our assets is just blank. So remember, we are only building the model layout now. By the time we are done, we prepare our 3 financial statements. That's when we now need to go back and start making the adjustments. So one other thing that I really don't like, you see all these guys showing red, like devilish something. I don't know. I don't usually like it, but we can leave that. But for the part of cash flow statement, I don't like putting it in red. Number one, red is assumed to be more like a loss. So we can still leave it in our profit or loss account. But on the part of cash, I don't usually like this. I don't even like my model just having those red color everywhere. So I can just press Ctrl+1. Let me remove the red part of my formatting. So at least someone should know once it's brackets is negative. I don't like that red thing. So can we extend this to invest cash, excess cash at 2%? And definitely, that's where your revolver comes into play, circular referencing and the whole thing. But we are not covering that in this training. But that's a very good thing. So you cannot, as I said, I've given us almost the framework to build model for any startup. Anything you want to learn, you've understood the practical aspect of it. Anything you want to learn, go to YouTube, type it, you see someone that has actually done a sample of it. Since you have the holistic understanding, just, oh, okay, this is what the person have done, because you are just speaking everything from these our 3 financial statements. That's all. Right? So by the time you are doing the revolver, definitely to result back in circularity. So by the time it's returned back to circularity, you see this overdraft that is coming in here. You also now need to go and build in another loan schedule. Now need to go and build another loan schedule. You need to go and build another overdraft schedule that will flow in here. So when the company has excess cash, they start paying the overdraft, they start paying it back. Once the company go back to a negative cash, they go back to that revolver. So it's a whole lot of things. Yes, we are not covering that. Maybe some of these days we can do more like an advanced advanced class. So financial modeling is very interesting. Trust me on that, especially if you want to go into project finance. Yes, project finance is the interesting part of it, because by the time you're not doing that, you now need to build the cash sweep. So the cash sweep, we say we now tell that, okay, so if you have this cash available for debt service, a portion of it will go straight into our first loan, right? The first borrowing. Then if you have excess cash left, it goes straight to settle some of our revolver. Then some other part of the cash now go straight to the equity people. So it's just kind of that flow. And that's why they call it cash sweep. So you have a cash, you say, oh, this cash, let's pay our first borrow, our first loan, our first debt, they pay. Overdrafts, do you have cash to pay? They pay. Then the cash, oh, can we pay our equity holder, their own equity, their own dividend, and the whole thing that comes into play. So it's a whole lot of flow. Yes. We can always learn that. We can always learn more about that. Yeah, don't let me give you everything. Don't let me give you everything. That will not be good. That will not be good. So, all right, we have our 3 financial statements. So this balance sheet, okay, this retained earning that is showing red as well. I don't know. I don't like this. I don't like that red everything. So we can still leave it in our income statement as, yeah, we know that is more like a loss. But for that, I really don't like it. Right. Okay, so now we have our model balanced. Now we've built out our cash flow, our profit or loss account. Let's now consolidate that into let's consolidate our balance sheet. So what I'm going to do is I can just copy this, my format that I have here. This is my balance sheet, right? I will copy it so I can work faster. So 1, 2, 3, 4, 5. So 5, I'll copy it, come straight to my balance sheet and just paste it here. Right. So I'm just trying to work fast so I can delete this as well. So once your monthly model is balanced, trust me, you are good to go. So let me delete this guys as well. So where I have my formula intact, then I can now go ahead and now use my sum if. So sum. So remember, all the line item in our balance sheet represents ending balance at a particular period. So equal to sum if, what is my range? So I'll go to my monthly model and I'm going to select the period end. I'm selecting the period end, not the year. So period end, I'll keep that constant. What is my criteria? So my criteria is the same ending date here. So I'm going to keep the row constant, comma, then some range. Then I'll go straight to my monthly model, scroll down to my balance sheets, highlight everything here. Then I'm going to keep the column constants, right? Those cell referencing, they are very important. Trust me on that. You can see, just because you don't need to do anything anymore. Just link it. I'll just copy, come here, paste, 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 paste. I quit capital, paste, paste. That's all I'm doing. Come here, paste. So let me go make this big and let me remove that red thing. Just consolidating. Even if you want to, they want quarterly. As long as you have that monthly well prepared, just copy. So copy here, copy, copy, just paste, paste, paste the formula, and you see your balance sheet must balance. Does it look like a magic? Does it look like a magic? What do you guys think? I know the ways most of us usually do it before, right? You come here, you create maybe after, so you do it, you calculate from the first one to December, right? Then you create one, you're going to create one column. You create one column here, then you put your year summation there, right? So that when you want to link it to your yearly, but you don't need to do that. Make it flexible, right? Such that if they want to change the timing of the model, so maybe they decide that, we're going to start, we are not starting 1st of January. So maybe you are starting on 6/06. You press enter, and it's kind of flow as well into the model automatically. Because if you've done it from January to December, then they now change the period, which means you now need to come back again and now start. That's wasting a lot of time, right? So that's how to kind of do that flexibility into it. Okay, Shagun said it doesn't look like magic. You understand the logic now. So to the part of the cash flow, I'll just come to this monthly model, copy this same cash flow structure that I have here, right? Just copy it for the first 5 period, 1, 2, 3, 4, 5. Copy it down to my ending cash, copy, then come to my cash flow and just paste that. I can go ahead and remove this for now. Remove this. Okay, so for the cash flow is a cumulative, right? So I'm going to type sum if. So now my range in my monthly model will now be yearly. I'm going to select this here, keep it constant. So my criteria will be the same year that I have in this my cash flow, comma, then the sum range, go straight to my monthly model. I can scroll down and I can just highlight everything while I'm keeping the column constant. Enter, and I can drag it for the other years. Let's copy it down. So I can copy this, put it here, just for the years, just paste. Then let me be sure if my model is working fine. So 322, look at my ending cash in my cash flow, 332. So I go to my balance sheet and let me see, that's the same thing that I have in my cash. So 332 as overdrafts as well. So everything just work perfect, right? So where's our balance check? So now let's look for a balance check. So let's create our balance check. So I think what we're supposed to do is come here under our model audit. So let's call this our balance check. And here, saying my monthly balance, then my yearly balance. So I'll come here and I'm typing equal to sum. Go to my monthly model, my balance sheet here. Okay, so let's even do it. Let's do it inside here. So inside my monthly model, this is my balance check here. So I've created a row total here. I'll just sum everything here, enter. So I'll just link that to this, my guide, equal to the summation that I have in my monthly model, which is this guy. Then do the same summation from my yearly, equal to sum. I have it. So come here, equal to, just link that to my yearly model. And I can type, just sum it together. So it's giving us 0.00 something. So if you look at, if you audit it, so to audit your outputs of a formula in your Excel. So on your keyboard, press your F2 first and press your F9. So in case your keyboard has Fn, you might need to press and hold the Fn. So this is more like the funny things that usually happen in Excel, right? Just one funny 0.000019 of a thing. It's just kind of funny. So let me just round it down. So what's our formula to actually round down something? Anyone want to remind us? Anyone? So I want to round this down. Okay, round. Okay, I was using random. Okay, so round to 0 and let's see. So this is perfect. So I now come here and call this my balance check. Balance check. So and I'm saying equal to if this guy is equal to 0, comma, then she give us model balance check. Right, so this is in the quotes, right? And okay, so model balance check should give us okay. So if not, should just give us error. I'll close the quotes, close my bracket, and press enter. So we have this, and I can call this my check. So I go to my profit or loss account. Okay, so I can come here. So we already have that. We've created that in our model template, and I can just type equal to check and press enter. So in fact, you can create your conditional formatting. So when it is balanced, maybe it should give you something like green. If it is not balanced, it should give you something like red. You can always play with that one. So let me just copy this, put it on each of our worksheets. Right. Let me zoom down. So come here as well. Paste it. Paste it. So in all the worksheets. Okay. So I'll copy it again. Okay, let me just write my check formula. The guy does not want to copy. So here, go to all the worksheets and type check so that we have that working fine. Monthly calculations. Let's be sure everything is working fine. Come here, let's type my equal to check. Here, and type my equal to check. Enter. Here as well, type my check. So you must remember to put this on all your worksheets. So summary, got to check. And we have this. We have this. right? So very big congratulations to every one of us. Okay. We've been able to build our 3 financial statements for a typical startup. Let's clap for ourselves. Let's clap for ourselves. I know it's really not been easy, right? I know it's not been easy. Let's clap for ourselves. 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 I know it's really not been easy, right? So we built a typical 3 statement model. But you know what? To me, right, when you get to a stage, I will tell you that with what we've done now, we are just 50% done with the model, especially for a typical startup. Because let's take a look at it. Go straight to our profit or loss account. It is very, very obvious that this business cannot survive. So now, how do we now make this model? How do we adjust it to make a lot of senses? And that is where the main work is. How do we adjust this to make a lot of senses? And that's the next thing that we now need to do. Number 1, know your model. Know what are the key drivers of the model. And that will now help us to do necessary adjustment that we need to do. Now, from our profit or loss account, let's even adjust only our profit or loss account, and let's see how that kind of have effects on our business. It's so obvious that the business, the cost of running the business is way higher than the interest income. Now, this is where the analytical part of it now comes into play. What are the things that you think we can do to turn at least this business around? So remember, financial model does not stand on its own. The whole objective is also to be able to develop different strategies. Oh, maybe we need to plan on being able to give more loan out to people. We need to find a way of reducing some of our costs and all those things. So now let's do those adjustments together. Okay. I know this is what we are going to do. I think that will be very, very interesting. So I'm going to save these documents. So let me save these documents. We are going to do it as a group activity. Right? So we go to, I think, yes, let's make it very, very interesting. I think I would love it this way. This way. Right? So I'm going to share the document with every one of us. As I said, we are not done. We are just 50% done. So how do we make this model? How do we make it make sense? So I think I'll save it as version 1. So let me close it. And let me upload it on our drive, on my drive, so that I can share that with us. We now go into our respective group. Right? You now tell us different, how do you think? So play with the model. Remember, everything you need to do, you are just doing it from the input worksheets. And the model will automatically, as you are doing the adjustments, you can also see the update itself. So let me drop it first in the chat box. So I know some of us might not be able to see it. So I'm going to drop the link to the file as well. Okay. So I've dropped the file. So now let me also share the link with us. Yeah, so what we are going to do now is you go in as a group. So maybe someone can decide to share their screen, right? Then have that discussion on what are the things that you think we need that we can adjust. So document it down so that, because you are going to present, you are going to do the presentation to us and tell us, okay, my group, we think if the business kind of do this, maybe they might make a loss in the first year or second period, but this also. So I just want you to create that story. So I've dropped the file in the chat box, and I've also sent the documents as well. So kindly confirm if you have this, if you have the file now. So you can just click on your answer so that I'm sure we're on the same page. So before we even go straight into you doing the analysis, doing the investment viabilities, right? We need to first make this model make sense. The cost is way too higher than the revenue, the everything. So this profit or loss account, everything is just not looking more like it. right? And secondly, what about their cash? So they have a negative cash for all the 5 years period, which is definitely not possible, right? So you go in as a group. I'll just put us in a random group, have that discussion. So someone can decide to share their screen. And remember, all you need to do is go straight to the input and make your adjustments. For example, I'm saying, okay, maybe we should come under our users. And maybe we said, well, for the first period, I believe we can do more than that. Maybe we should put this as 5,000. Put this as 5,000. Look at my profit or loss account. What is the effect? That single change, see what has happened. So this is what I want you guys to look through. And remember, try and make it realistic. So one other thing you can do, so to kind of give you a good sight into it, you can link. So maybe you prefer to, you want to have our total users, right? So that as you are doing that adjustment, it's kind of, you can see if this is realistic or not. So I'm looking for the users. So for example, this is our user schedule and active users. So active users, this is the schedule of active users. So what you can do is just, so this is more like you doing your rough work. So as you are making that adjustment, you can see the output. So I can come here and let me put my active users here. So remember, you will delete this. This is just like you auditing and your model. So let me just type some if my monthly. So here, okay, no, it should be the ending users. We need the ending users, right? Match with this ending period. Then it should give us the active ending users for that period. So it should give us the active ending users for that period, right? Okay. So let me log the column. So this is where more like the main work is. Okay. Is this correct? Is this correct? All right. So I'm just giving you an example. So that those are the kind of things. So as you are changing it, I kind of guide you. Let's see if that is correct. Active users. Active users at December. As at December for this period is 12. Okay, so I think it's correct. So if you think, no, this can even be more than that. Maybe you should change, everything should increase by 10%. You change. So one thing that can also help you, make sure you link your revenue. So you can link your revenue, your interest income, all right? Link also your profit for the year. So I'm just giving you a clue on things that can help you. So as you are making those adjustments, you just kind of have everything at a go. So this is revenue, this profit, right? So as you're making the adjustment, I'll be like, no, this is not making sense. This is too. So I'll link my cash as well. You can link your ending cash. So as you're making that adjustment, you are just saying the whole thing. So I'm saying, okay, so what if we start with something like around 5,000? What would that effect be? And you kind of see, okay, I think active, you can still have active users of 1,638 by the end of year one. So just you trying to make those adjustments. What if we increase the percent of our active users from this 30, maybe we increase this to 50, we increase this into 60, and you just, so as you are doing it, it's kind of easy for you to tell that story, right? So that's what we are going to do as a group. So, and when you are done, you see that everything is working fine. You can then go back and do this. But remember, so maybe someone can share the screen while someone is taking note of those adjustments that you guys do. All right. Then when you come back, you do your presentation and we both agree that, okay, you know what, let's use this, let's make this adjustment. And we have our final model before we go straight into the analysis and the investment viability part of it. I hope you understand. Are we good? Any question? Any question before we go for our breakout session? Any question? Are we good? Are we good to go? If you are good to go, just click on your and to, or just type something in the chat box that yes. So I'm sure. I think we can have like three. Or okay, let's just have a two. Let's have a two. Let's have two groups. Right. So agree. Please make sure you contribute, participate. That's the best way to learn it, right? Making those final adjustments is what is the most important part of it. As a financial modeler, it goes way beyond the values, right? And as remember what I told you, when you build your first model, always make your users know that, oh, this is more like a draft model. The model is working, everything is working perfectly. Now let's agree together based on your business strategy. Do you think this number of users that you have in this your model is realistic, or you believe you can do more than that? And by that time, they're just changing only the inputs. So that's the flexibility that our standard is saying. So we're going to have a 2 breakout room. Remember, someone can share their screen. So yes, you are making the adjustment. Someone is taking note of the adjustment. Then you have a presenter that will present how you want us to adjust it, your own output results, and we can now agree together. So we'll be going for our breakout room now, just two, and that will give us, I think 15 minutes is enough for us. Yes, put your mind together and oh, let's change this, let's change that, let's change this, let's change that. So we're going straight into our breakout room now. So please remember to participate. Participation is very, very important.
Hello, Victor. Hello, Victor. Okay, I will note it down.
Victor,
Victor,
please, we
please,
need
we
to
will need
share.
to share
Uh,
Oh, oh, apologies. So I think I'm going to grant that from, yes, apologies. Supposed to have activated. Okay, all right, we have it. Have it now.
okay, thank you. Okay, can everyone see my screen now?
Yes, I can see.
Yes, I can.
Okay. So
Hello, everyone. We can decide to share our screen as well. And I think maybe Daniel, you can just channel the discussion. Everywhere seems quiet over here.
The discussion is ongoing, but we couldn't share our screen. But
Okay, yeah,
I
yes,
think now we are able
uh,
to share. So
okay,
I think
yes. I just activated it. Apologies for that.
okay. So Segum, please, you can go ahead and share.
Okay, thank you.
even generating 1 million.
Well,
And
maybe what I'll
it's
just suggest is the business will particularly need additional equity investors at a particular point in time because it's already burning cash and it's just burning equity. So definitely, business will need people to bring in more money, right? And that will lead to equity dilution. So it just impact the cash and the equity. That's what I see here. Because everything we try to adjust. If you try to adjust revenue, just give you the impact is significant, right? Except you want to be unrealistic. And those costs are costs.
We even have some anomalies here.
With the equity impact, will it affect the profit?
Equity will not affect profit, but equity will just affect your
the
cash.
losses.
Yeah, and your shareholders fund. At least it will not be negative cash.
Well, I think I totally agree because if you look at what is happening around the startup, you see all the seed funding, Series A, Series B, C, like that. I think I agree with you. Yes. Yeah.
And okay, another thing is
So
that this second year,
but this second year, why is it 97?
It's so abnormal.
It's abnormal.
Yeah. Okay, 2023, right? Yeah. What's happening here? I see that it's declining somehow. Let's start from January. Oh, well.
This is the P or L. This is the P or L. So with the current change, I think we have profit from year 2 to year 5. Why are still having negative?
Yeah, we have a negative.
Year 1.
No, it's looking too high, so I'll be sincere with you. It's looking too high. How about the cash flow statement? How is it?
Okay.
Sorry, can you guys hear me?
Yes,
I didn't know I was
yes,
on
we
mute.
can hear you.
So what are the strategies? We already agreed now that they have to raise funds, but will they be raising funds for the next 5 years? Is that one sustainable? Hmm? Hello?
Yes, yes, we are with you.
I'm saying that is it sustainable that they'll be raising funds for the next 5 years? Or can we conclude that with this assumption, this business is not viable?
No, I don't think I can conclude that business not viable.
So I didn't catch what you said.
Hello,
Did
can
anyone
you
hear
hear
you?
me? Can you hear me?
Yes, you can hear you now.
Okay. I said, is it also possible that we reduce as in some of the operating expenses so that it should just be only the impact will not just be only on the savings and
All right, so welcome back from the break. Welcome back. Let me be sure we are all back. All right, we are done with the breakout session. So just click on your answer so that I'm sure we are back. We are back. We are back. We are back. Some okay. Said we are not back. No, you need to be back because time is really moving very, very fast. Very, very fast. Right, please let's confirm if you are back. If you are back into the main house. If you're back into the main house, into the main house. Into the main house. Let me confirm we are all back. We are all back into the main house. So how was the deliberation? How was the deliberation? Yes, I know you are back, but you are not fully back. Yes, I understand that. Right. So let me sure if you're back. If you're back, let us know. Let us know if you're back. If you're back. If you're back. All right. So how was the deliberation? So the first group, right? Or maybe let's just let's have a random discussion. How was it? What was your thought? Right. The deliberation was tougher than the exact. Now you see how it is, right? Because that's where the main model is. Just to point this out. Remember, the client have actually paid you for this job. That's the first thing. Remember, the client have actually paid you for this job, and they need this investment. They need this 100 million. So there's no way, as which means that's to bring that discussion that irrespective of the model you see, number one, automatically there's always a partiality into it. And second thing is all about forecast. All right. So which means no forecast can be 100% accurate. It's either it is wrong or it is a luck. So there's nothing like 100% accurate forecast. So when you are kind of presenting to your users, your clients, you need to be able to point that out so that they are not just keen on you giving them everything being 100% accurate. You cannot be 100% accurate. It's all about tomorrow, but we just need something to be able to make that decision. So how was it? How was it? How was it? How was it? Because definitely you can't go and present. They need to present this to their investors to get this funding. So when you build the model, you cannot just go ahead and tell them that no, this is not, this is not, this is not. So let me hear from us. How was it? What are the things that you're able to adjust? So anyone from any of the two groups, share with us. Share with us. What did you guys work on?
Okay, Victor, good afternoon.
Yes, Abraham.
Yeah, from our group, we agreed to increase the investment facility from 1 million to 5 million. And also, we agreed that the growth rates will increase in year 2024 from 20% to 50% till 2026.
So okay, so just to be sure, you decided that we should increase the investment facility into 5 million, right?
Yes.
Then the second one, which is the growth
for the investment facility.
Okay, also we should increase the growth by 50%.
Yeah, from 2024.
2024. Okay. So let me see. So let's change this to 50%, right? And here 5 million. Is there any significant impact? I'm not sure. The impact is not that much. Everything
that's
is
not all.
Okay, that's not okay. Okay, all right. So just okay, just
Yeah.
list everything. So don't let me do
Okay.
anything. So just tell us everything.
We also agreed to reduce the number of financial analysts from 3 to 1. Since we are just starting, we agreed to start with 1.
Okay.
And maybe I think around 2025, we increase it back to 2, and for 2026 2. And also our base user growth, we increase it in year 2023 from 2.5 to 5%.
Okay. Got that.
Yeah. And also we agreed to raise funding, additional funding of 100 million.
Okay. Which of the, well, when will that be coming in? And what form of funding?
we agreed to raise equity, right? And looking at because if you look at the initial 100 million we're looking to raise, there's a wrong way for that 100 million, right? And we'll run out of cash because the company is actually burning equity, as in burning cash. So we didn't really speak around the timing, right? Because we're still deliberating that. But from what I see from the model, looking at ending of 2023 to raise funds, additional funds, because we need more funds to cushion for the cash burn and also to invest in marketing and branding so that people are aware of the product and we can increase our users exponentially, because that's the major driver, right? Because for fintechs, the revenue, the rates are usually in trickles. They're not as high.
Okay, all right. Thank you for that. So you are suggesting that maybe they will need to raise another series of funding later, right? Just to cover up for this significant cash deficits. All right. I love that. I love that. Let me hear from the other group. Yes. What do you think? What do you think? And I think number one thing you notice here is there's a fall in their net interest income within 2022 to 2023, 342, and the following period 118. Did you guys check that? What do you think caused this? As I said, as a model, it's not about building the model. You must know your model. What do you think would have caused this for? And I think it's coming from the interest income.
We did check that. We saw that the growth rate reduced, right? The first year, I think, was 5%, second year, 2.5%, third year, 7.5%. So what we did, I think we're supposed to capture that. He mentioned this, but
I'm not.
Supposed to, yeah, you can see 5 to 2.5, right?
I'm not sure that's it. Remember, this is more like a monthly growth.
Yeah, it's a monthly growth rate.
Yes. So what that means is, let's assume as at December 2022, you have 500 person on your platform, which means this following period, the January of it will now be this multiplied by 1 plus this. So I'm not sure that's it. I'm not sure it is this, because this is more like a monthly growth. Remember that.
Okay.
I'm not certain if that is it, because remember, this is just like a growth. Okay, so you guys didn't check that. So let's hear from other groups. Let's hear from other groups. Other groups you want to share with us? I think that should be Oluwadara's group. What did you guys?
No, this is my, like, the group I just presented is my group.
Oh, okay. So I think the dip, okay, all right. Daniel said there was a dip in active users because exactly. So as a modeler, right, those are the things that I want you to know that you will not get to read from any book or anything. Now you go straight to your output and we realize that what's happening? This is such this decrease is way too much, right? Then if you go to your monthly calculation, where is that coming from? Then you should know, you should understand what is the flow of this my model and where is the whole thing coming from. Now, if you go straight to our active users, let's look at the active users. So in the first period, let's look at it. We had a new active users and we churn out 6 users. That's way too high. The following period, they added 2 new users and they churn out 5 users, which means the number of users being churned is more like the same thing. It's greater than the number of users you are adding. That's a big big disadvantage, right? And it continues now. The first year was able to cover up, even though the users were decreasing. But let's look at 2023. That was where the whole thing now opened up. Because now you're adding 2 users, you're churning 3. Got to a point where as you are adding, you are also churning it off, which is definitely not good. So you can see this period. So as a modeler, know your model, understand the outflow. It will be a big blow if your clients kind of pick error out. And if you look at 2024, see this 2024 now starts mirroring the actual thing that's supposed to be. You had 9, you churn 1. You had 10, you churn 2. You had 10, you churn 3. And that's where that increase meant kind of fall back. So what adjustment do you think we need to do to even correct that first? What adjustment do you think we can do? Anyone? What adjustment do you think we need to do? Where do you have our churn rates? There's our customer churn rates. What adjustment do you think we can do to that?
I think we need to increase the active.
Okay, said reduce the churn rate, especially for the initial period. I agree with you. Secondly, I think this churn rate is supposed to be yearly, right? And what we did in our calculation was we did it over, we used that yearly to calculate our monthly. So that's more like where the first error is coming from. So let's divide by 12. Let's divide that by 12 period. So we convert this back to, so let's see, that's first adjustment. Let's convert this back to monthly. Let's look at our outputs and just see. So as a modeler, it's about that thinking. Think. Right? So maybe we don't need to reduce the churn rate. It's just because we actually apply a yearly churn rate on a monthly calculation. And it was just eating through it and all those kind of things. Right? So we do that adjustment, you just see the simple, significant change on this. Now, this is our profit. So what I'm going to do is I'll highlight this. Have you used what we call camera 2 in Excel before? Anyone? Are you conversant with what we call camera 2 in Excel? Okay, Joseph, you've used this before. Anyone else? Camera 2.
Yeah.
Okay, right. So let me make this interesting. So I'm going to just create that our outline. So let me create that outline here. I want to create one outline so that I can have almost on my thing. Okay, so let me collapse it. So in case you don't know how to use camera 2 in Excel, you can check that out. So let me highlight everything. So okay, let me even reduce this a little bit. So I will highlight it, click on my camera, come to my inputs, right? And let me drop the guy here. So what camera 2 does is this. The same thing that I have in this my profit or loss account, I have it here as well. In my picture that I copied like a camera. So if I snapped it and I put it here. So anything that I'm doing, as long as it's changing here, I will also be seeing the change from here. So for example, I'm saying, okay, you know what? But our active users are also based on a yearly percent. Who is Ashaolu? Okay. I'm curious about that. Okay, so you're saying this is yearly. So remember this will be picking from what we already have. So I'm not sure that has a significant change or significant effect. So we can still keep this the way this is. Yes, it's just a percent or something. So we can still work with that. So I'm not sure we need to convert that to monthly. Okay, so for example, our base users, maybe we should change this to 200. Let's see what happens. Is there effects? 500. Okay, it's making a little difference. So I think we changed it to 5,000 the other time, and there was a significant difference. Right? So as I said, the client has paid you. You cannot afford to send a model that's just reddish everywhere. So we've done the first adjustment. So just one. So you can have different adjustments, could be tied together, or maybe we should increase this, change that, and the whole thing just kind of flow together. So with just these changes, you can see the impact already. Now, what about our cash, which is the king? So it looks like this business we kind of suffer this big blow of cash of a thing. So if you're able to build that out, let's see what is happening here. I think it's more driven by our cash flow from operations most. right? And the whole thing, you can see from our cash flow from operation, it seems to keep having up and down, and which would definitely have impact on this our cash flow statement. Now, there's a way we need to make the cash to be positive. Yes, because that is what you will use as a base for valuing the business, and also do our viability, right? And it's, yes, I can also see that. So it seems as our loan is growing in this respective period. So for example, look at this loan and advance for year 5. If you check that from our balance sheet, so it seems as our savings is growing, right, our loans too is also growing. So this, I just want you to know this, that yes, it's good about everything, you've built everything, you've put the value together, but the main work is what you do at the end, right? So this is what I want us to do. So because of our time management, number one, I want every one of us individually, right, go ahead, look at this model. Assume you are going to present this to your client that have actually paid you. Do the necessary adjustments that you think will be needed. Remember, you're also a financial advisor. So by the time you build out everything, you are also advising your what? You're advising your client. Once you have this perfectly done, every other thing you are doing after that, they are just templates. Your ratio calculations, your metrics and everything. So I shared one metric link with us, so you can see how to ratios for calculating. Is it this? Okay, yes. So metrics for calculating. So you want to calculate your average revenue per users, monthly subscription, revenue divided by average subscribers, your churn rate, right? Your retention rate, your gross profit margin, everything, they are just formula. They are just templates that will be picking their variable from what you have in the model already, your payback period and all those things. So one thing I can also do to assist is I will share a sample of a tech model that I built with us, right? Just like more like what we are doing. So you can take a look at the analysis, how to calculate your NPV, your internal rate of return, this all these ratios, payback period, and the O related thing. So I will share that with us. As I said, best way to learn is when you get to do it on your own. So we've done almost the most important part of it. And the whole thing is play with the inputs, make necessary adjustments, make sure the model makes sense. If you feel okay after the whole thing, you feel they might need to bring in some financing, right? Definitely, you need to incorporate that. And also one more thing that I feel might be affecting the business, right? The cash elements. If you go to our calculations, this is very important. Where we use that our offset for our loan repayments. This will also be affecting the cash management of the business. So as I said, it's way beyond just numbers. It means they disbursed a loan of around 9.765. So this period, for this period like this, right, for the first 5 months, which means there's no cash coming in. This is like a whole 134 million. And in the real practice part of it, let me see, I think I built something that kind of showed something like this. So let me see, where did I drop that file? Where did I drop it? Where did I drop the file? I remember I created something. So you build out that schedule, it will be more like a waterfall. So which means if someone is taking this loan, this period, definitely the person needs to start, at least the person will make first repayment in this February. And it's not as if the whole thing will be paid in this period. No, which means all the users that have taken this loan in the first month, they need to pay. because this would be like this divided by over the 6 months period that we've given them. It comes into play. They pay part of it, they pay part of it, and it's kind of help the cash management of the business. So let me see. But I remember, I think I have a sample so that I can show us that sample. Let me check that. Let me check that. Where did I put it? Where did I drop that file? Okay, so that I can just show us samples, more like a waterfall. As I said, it's all about creativity. Creativity, since you understood the whole concept, now to be very, very easy. So let me see that. Let me see that. Remember, I have the file. Okay. So let me see if this is it. So that I can just show you a sample. Exactly. Exactly. So this is what I'm saying. So let's assume, just like example of what we have, loan has been disbursed of 263 in the first month, which is almost the same thing with what we are saying here, the loan that has been disbursed. So which means if this loan has been disbursed during this period, based on what we have, we are saying this will be paid fully in this 6th period, which is which might not be the best approach, right? Which means the best approach is, if this is coming in, this person has taken a loan, we assume he has taken it before this period, so it starts counting because it's going to pay back over the next 6 months, which means this 263 will be spread over the next 6 months. And that kind of help the cash flow management very well. The second loan that will be taken in 6 months will also start its own repayment in this period. And it will be paid over the next 6 months. So it just flow like a waterfall. This one that is being taken in this period will also be divided over the next 6 months, which flows in here. The next one comes in here as well and just kind of flow like this. What do you think? Is this supposed to be the reality part of it, or this is our own first approach? What do you think? What do you think? What do you think? What do you think? I remember someone pointed this out when we're building it. What do you think? Let me hear from us. Let me hear from us. Let me hear from us. Is this how it's supposed to be?
It can be either ways, Victor. From what we did a bullet repayment at the end.
Exactly.
You can actually have your loan be a bullet repayment at the end, or you have an amortizing loan that you pay over time, right? You pay principal and interest until the end of the tenure of the facility. So it depends on how our loans are actually structured, right? So I think this one that you have on the screen would better ease cash flow, right?
Exactly.
Due to better cash flow. The other bit, right? You can leave it for the banks to handle.
For a typical financing institution, but I think most of this startup you are paying is their own is always amortized, right? So I feel this is better for that cash, a good cash management, and this has actually been automated. So even if they decide that, oh, you know what, we give the loan only for 5 months or 3 months, right? Because of the amount you put this, and it's just this waterfall just flow automatically. No, it's 2 months. Just put the 2 months, and it just flow automatically like that, right? So those are the things that you now considered when you finish building the model. I think, okay, you know what? Maybe I should incorporate this approach into it. As I said, it's more like a long table. So your own will now be for like a different 60 months of a thing. So, but for the cash management, I feel this will be a little bit better. And you can still decide to keep it as this bullet as well, but it will kind of eat into that cash management, which is what we can see from the model as well. Right? So with the model, I believe you all have the model now. As I said, yes, we are almost done with the model, but you need to finish this up to make sense such that they can present it to the investors and the whole thing still makes sense. So as part of your own work, right, you've understood the rudiment and the whole approach and the methodologies, right? So your own is go ahead, make this model perfect. Do the necessary adjustments. If you think maybe there will be a need to kind of allow some funding to come in, or maybe they need to hold on their dividend payments because of cash management. And so it's just about thinking. Just think right, think through what's this, what is this. As I said, you are also a financial advisor. Then when you are done and everything is looking good, you can now go ahead, create your analysis, do your different metrics check, right? So I will try and reach out to my colleague, Adi Dolamu, and when we can have the valuation class so that you can also go ahead and build the valuation into this model, right? So I hope I've actually done justice to this, our boot camp at my own end, right? The truth is there's nobody that can teach you everything 100%. You best learn when you get to do it yourself. Yes. The more you build, the more you get better at it. You've understood the whole approach, the framework and everything. I think I've done justice to that, right? Yes, let someone confirm that I actually did justice to that. Did I? Did I? Did I? Did I do justice to that? Okay, so I don't know. I would just like to have just a testimonial, right? And also, if possible, we can just share our video together before we close the session. So I would just like us to have our videos on, right? So if you want to do makeup, just kindly do that. Right. So as I said, I will share another template model with us. Now that you have the understanding, I will share the model so that you can tap into how we've done the analysis, right? Then I'll reach out to my colleagues so that it can let us know when we can have the valuation class as well. So I would just like everyone, if possible, you just share your video with us, and I would like to have maybe one or two testimonial. And just to remind us that we also appreciate if you can go to our LinkedIn, right? Just try and share one or two things that you've actually gained from this our bootcamp before my colleague will then come into play. All right, so I will appreciate if you can just share our video. So let me stop my screen sharing. Okay, so okay. So let's do it like this. Maybe I should put this screen sharing on my screen. All right, so let's kindly share our videos. Yes, I'm actually using double screen, right? So let's share our screen. Let's share our screen. And I would like us, if you can just one or two or three people, they can just give us a testimonial. How was the training? All right. I hope you're able to gain one or two things from this as well. Okay, so I'm actually using double screen. Don't mind. Okay, okay. Let me stop my screen share so that everyone can see ourselves. Okay, perfect. I think this worked better. All right. So hi Daniel. Can you share your screen with us? Let's see your good-looking face. Yes, Abraham. So thank you, everyone. Thank you for being part of this great boot camp, right? I believe it's actually been great, being able to learn one or two things, right? Okay, so okay, let me just put this so that I'm looking straight. Yes. All right, so a big thanks to everyone. Thank you, Abraham. Thank you, Daniel, Oluwati, Milenyin, Miko, Oriofe, Oladipo, right? Shegun, P. Joseph, right? Oluwadara, thank you for being such an active participant, right? So I don't know if one or two person can just share a testimonial of what your experience has actually been during this boot camp. I think we really appreciate. Yes. Some did when we started, right? So I just want to have some with a video. How was the session? Don't mind me. Right, been working since, not slept since yesterday. Yeah. Right. So let's kindly share maybe one or two things.
Hi Victor. Hi
Yes.
everyone. So I'll just say something. So I think the class, thank you very much, Victor, for the class. Thank you for the section, and thank you for the patience and how you took us through the details, right? It's a very intensive class, to be honest. So it's not been just surface level modeling, corporate finance modeling. It really opens our eyes and minds to how startups can be aside from the modeling skills that we've learned, how complex it can be, building a startup model and all of the factors that we need to take into consideration. I think the first eye opener for me was that inflation thing, where you have to start looking at inflation and then looking at it on a monthly basis, looking at the two methods for, factoring inflation into the expenses and all that, churn rates, really delve down to the fintech model, to the banking, something that is similar to the banking model. And again, combining the accounting knowledge and startup knowledge with modeling skills is actually very great. So thank you very much. I've really learned a lot. Thank you.
All right, thank you for that. So please make sure you make it complete. Continue building. Keep practicing. Right. I know. I'm quite sure by the anytime if you pick any financial modeling book now, trust me, I'm quite sure the way you will assimilate it will definitely be different from the way you've actually had that understanding. So most times it's always good to understand the practical approach and the other thing. So when you go to book and they are saying this, you already, oh, okay, this is what they are saying, this is this and that. So thank you for that. Oluwadara, as I said, we are not yet done with our boot camp. My colleague will reach out to him so that I can know when he will be available to take out on the valuation part of the model so that you can incorporate it in what we have. Remember to do the adjustments, right? To be presenting it to your clients, and I'm quite sure you don't want to be showing them what is not. So thank you for that. Okay. Anyone else want to share with us? I know I have some of my boss.
Okay.
Yes. Okay. Yes.
Yes. So I've actually learned a lot from the boot camp. I remember.
Okay. So
joined the program, I was really thinking about where will I get money to even do serious and valuation program, especially for fintech. In fact, it's as if this program is a godsend for me because I was very, very keen on learning valuation for fintech company because I already recently joined the space and I actually needed that knowledge a lot. And just all of a sudden, I'm on LinkedIn and then I'm just in a page saying, if you want to join advanced modeling for fintech valuation, like, thank you, Jesus. This is perfectly what I want. And so during the program, I've learned a lot, down from building the financial model from scratch, including inflation and calculation, everything about churn rates. The whole package has been perfect. And all the assignments, your mode of teaching for
okay,
has really helped a lot because we have to then go back on our own and then build on what you've taught us. And I'm also looking forward to the second phase of it with I can't remember the person's name, the Deloitte.
Yes.
Yeah, so I'm also really looking on that as well. But it has been a very, very great experience. I want to thank you very much for that.
Thank you so much. Yes. The valuation of fintech is almost still the same thing with a typical business own, but their own their different perspective to their valuation, and most times their value kind of rely on their platform and also the users, right? And that's why they usually focus more on average users, average revenue per users, and the whole thing, right? Average. So that's what it is. I'm quite sure my colleague will do justice to that. So thank you for that. Yes, I know I still have some of my boss in the house. Yes, Daniel, how you doing? I think Daniel is joining us from Ghana, right?
Yes, hi Victor, hi everyone. So yes, I'm busy in Ghana, but because of LinkedIn, I'm able to, I got the opportunity to participate in this program, and I realized that almost everybody is Nigerian, and sometimes I kind of feel like I'm the odd one out. But yeah, I must say that the boot camp was very great. Initially, I didn't get in, but I had to disturb Victor on LinkedIn because I really wanted to be part of, the boot camp. Last year, I tried to, I signed up for it, but after the first assignment, I couldn't get to participate in the boot camp. And so this year, I really wanted to be part of it. So even though I didn't get in, I didn't give up. I went to disturb Victor a lot. on LinkedIn, and then finally, he gave me the opportunity to join the boot camp, and I've learned so much. And I want to say thank you, Victor. I took FMVA. That was in 2020, but I still feel like there's a gap in the knowledge, and I came across D Brown Consulting and Victor, and I've been attending your boot camps and your webinars since then. I don't know if you noticed, but yeah, I've been attending since then, and I've learned a lot since then, and so that's why I really wanted to be part of this boot camp. And I've learned a lot, the practicality aspect of modeling, and I've realized that modeling is not just like you always say, it's not just putting numbers in Excel and giving to your users to use. Yeah, but it's about they being able to use their model to make decisions and all. And I think this boot camp has really helped me to be able to achieve that. Thank you very much, Victor. Yeah.
Thank you for being part of it, right? And I love your dedication so much. One of the people that usually submit their task, in fact, immediately after the session, you would have done it and get it across. I love that dedication. Thank you so much. Anyone else want to give us their own testimonial before we wrap up? I know most of us, we have a lot of things to do as well. And I think it was because of the timing differences, we would have a lot of guys from outside the country, or at least, we are making impacts as well. All right. So any last word?
Yeah,
From
good
any of us?
afternoon,
Okay.
Victor.
Yes, Abraham. Are you
Can you
there?
hear me?
I can hear you. I can hear you, Abraham. Okay. Network is funny.
Okay. Yeah, thank you for this session so far. Can you hear me?
Yes, I can hear you clearly. Can hear you clearly.
Like I said in the morning, this is my first time of seeing a financial model built from scratch. I mean, it has really opened my eyes, and I've learned a lot about Excel and modeling. Thank you very much for the session.
Hello, Victor.
Right. Yes.
Hello, can you hear
Okay.
me?
Yes, Razak.
Okay. Once again, once again, I just want to say thank you very much. Because the reason why I'm just trying to really appreciate this more, is in the aspect of the valuation class that we are still going to take. Because as in I been an accounting professional, so I assisted someone to prepare a financial statement. At least it's just a startup as well. So after concluding the accounts, so the person was like, okay, can you just help me to do some analysis? And based on my own little experience of financial issue, as well as like, okay, this is my own understanding about it. So that's okay, this is my own submission about the operational activities of the company. So I was like, okay, if you really want us to do valuation, I don't really know much about it, but I can reach out to a friend who also work with EY. So when I told my friend that, okay, guy, can you just help me with this? Because of myself, the guy said he would just charge 100,000. But when I was not telling the guy was like, no, that the money is too much, that I should not worry. My friend now, as my friend has to open up to me that the average that he collect for a for evaluation is 500,000, and that's just like a side business. So that was when I now really appreciate that. No, as we are just getting a good for free from this session. Thank you very much once again, and I look forward to really participating in the evaluation.
All right, thank you so much. So valuation. Funny thing, I actually didn't learn valuation. I'm not sure valuation is something you really need to learn, because almost every day you do valuation. Trust me. Go to the market, hey, I want to buy this thing, and there's how much is it? And you say, oh, this is amount, and it's okay, I'm willing to pay for it. So that's the value. So money, cash, and value, they are almost the same thing. Once you understand the concept, as I said, because you definitely build your valuation on a model. Valuation is not a concept of what has happened. It's about the concept of future and benefits, right? So, but I believe my colleague will take us on that as well. So thank you, everyone. Thank you as well. So any final word before we wrap up the session? As I said, I would share a built model, sample model for a startup like this with us, maybe a tech as well, so that you can complete the metrics part of it as well. Then the valuation, you realize that valuation is always more like a one worksheet like that. So you already have the template, you have the old format. All you're just doing is just plugging, and being able to say it doesn't make sense. So the valuation relies on that of three financial statement forecast, especially the cash, and there's a flow between it. That's why I said make sure once those three make sense, then the valuation will to tell you a whole lot story about the value of the business as well. And you can still go online and check different approach when it comes to business valuation as well. So a big thanks to every one of us. All right, and I hope very soon we might be having some few boot camp coming up as well, and we might call for some supports here and there as well. So as I said, remember, number one, building a model from scratch is always the best. As I said, I'm not a template modeler. In all my 150 financial model project that I've done, yes, even though the template might be the same thing, but I always start from the scratch, blank Excel. So that's why you see that I'm kind of very, very fast, because when you are building from scratch, you know that, hey, I still have lot to do. So I need to work faster. So the more you do, I remember then when I was starting up my career, I got a job. Someone called me for a job, and he asked that I sent a sample of the model that I built. I sent it, and I told him I built the model from scratch. They did not employ me because of that. They said I'm lying. That number one, they don't know me as any back then, like 2 or 3 years ago. I don't know me as any modeler or anything, right? I don't have any certification, and this is one huge model that I built from scratch. I built a model template, and they said I'm lying. That's not possible. They said I should rate myself in Excel skill. I told them I'm below 3. They said, why will I be rating myself below 3? And I'm saying I beat that kind of complex model, and that's it. The more you know, the less you realize you don't know, right? If you ask me what is my I should rate myself in Excel, despite I'm MVP in Excel, right? Office app, I'll still tell you I'm below 5. Yes, that's it. So it is what it is, right? So a very big thanks to everyone. Please make sure you practice. That's more like how you get the max benefits from this. So for the task, as I said, I'm going to also share a sample model with you so that you can use that to complete the model fully, so that you know that by the time the evaluation part is coming from my colleague, you're just incorporating it into that model. So if you would like to submit it, or maybe you just want me to take a look at it, yeah, definitely I can do that as well. So thank you, everyone. And this part, we are not signing off yet, right? So I will update us on the evaluation part of it. And also, please, we really appreciate if you kindly go to our LinkedIn, right? Please just share some good news about the boot camp as well, right? You don't know what that might do. Just a way of you showing appreciation for the free program that we've done. And to people that have supported the recording, sharing one way or the other, I say very big thanks, right? We didn't get any support. Everything was just on me. So we have some guys at the back end that I also have to pay for them to get things done. So you kind of see that the session just kind of runs smoothly, and the whole thing, get message, get this and that. So some people are doing that work at the back end, and we need to pay them and appreciate them. So thank you, everyone. Thank you so much. If you still like to support today's recording, right? So you can also reach out and let us know. So thank you, and thank you so much. Someone is saying, please, can you share the loan repayment schedule file you shared earlier? I'm not sure about that. Yeah, but though I might be having a boot camp coming up, so that I show you we discuss how to create that kind of waterfall repayment schedule, right? So you can also something you know how to do. Yes, trust me on that. Just your creativity. You can get anything done with Excel. Just sit down, think about it. There's always a formula that can do it, that can get it done. So thank you, everyone, and let's make sure we enjoy the rest of our day, and bye for now.